Regaining leg strength isn't just about muscles. It's about reclaiming confidence, freedom, and the power to move through life without fear. For me, SCHG is more than just a ticker symbol. It's a philosophy, the backbone of my retirement plan and wealth-building approach. What if I could capture the best of American innovation with none of the guesswork and endless switching between stocks? In this age of relentless innovation, SCHG quietly defines trends while compounding my money behind the scenes, regardless of economic noise. So why focus on SCHG instead of the basic index funds like VOO or VTI? They are solid, but SCHG aligns with my vision for the future. First off, let's unpack what SCHG actually is. SCHG stands for the Schwab U.S. Large Cap Growth ETF, tracking the Dow Jones U.S. Large Cap Growth Total Stock Market Index. In plain English, that means I'm getting exposure to roughly 240 of the largest, fastest-growing companies in America, all in one move. There's no need to cherry-pick individual stocks. SCHG does the heavy lifting for me, automatically tilting toward companies with strong earnings growth. The big draw? This is a list dominated by names like Apple, Microsoft, Amazon, Nvidia, Alphabet, and Meta. When you invest in SCHG, you're not just buying stock in tech companies. You're buying access to the very heart of where the global economy is headed. SCHG is growth-focused and may be a little more volatile than your average index fund. But I'm willing to make that trade-off. I'm betting on innovation, disruption, and long-term transformation. SCHG allows for diversification while targeting growth potential. I love the low expense ratio at just 0.04%. It means more of my money stays invested and compounding. As a Schwab fund, SCHG integrates seamlessly into brokerage platforms, including fractional shares and automatic investing options. I see SCHG as a smart, future-oriented strategy aligned with companies shaping tomorrow, without the need to time the market. I wanted rocket fuel for my portfolio, something that would maximize capital appreciation and deliver real, compounding growth. SCHG fit perfectly into that role. SCHG doesn't pay out much in dividends, under 1%. Instead, every cent is reinvested back into the business to drive innovation, share buybacks, and organic expansion. I'm not looking for regular dividend checks. I want to see my investment snowball, powered by companies investing in their own bright futures. SCHG has consistently outperformed broader market indices like the S&P 500 during bull markets and growth phases. It gives me instant exposure to the areas of the economy that are growing fastest and disrupting the status quo. It's like holding a basket of winners. Let's talk about the holdings for a minute, because this is where SCHG really flexes its muscle. The top companies in the fund are a who's who of global innovation: Microsoft, Apple, Nvidia, Amazon, and Alphabet. Microsoft leads in software while transforming the cloud and AI industries. Apple boasts an unmatched hardware ecosystem and strong brand loyalty. Nvidia supports AI and graphics infrastructure, while Amazon excels in e-commerce and logistics. Alphabet Google is the backbone of digital search, ads, YouTube, and AI. SCHG includes Tesla, Broadcom, Adobe, and Salesforce, all dominating their domains. By holding SCHG, I was automatically participating in American ingenuity at every level. The quiet, compounding way that fees erode long-term wealth is often overlooked. High expense ratios or a slow drain on your wealth causing damage like a market crash over decades. Whether through mutual funds, overpriced index funds, or robo-advisors, small fees add up over time. I looked into SCHG and saw its expense ratio at just 0.04%. That's $4 annually for every $10,000 invested. In contrast, many mutual funds charge over 1%, which may sound minimal, but it can be devastating long-term. That 1% fee leaches into your compounding returns, like termites in the foundation. But what makes SCHG stand out isn't just that it's cheap, it's what you get for that price. SCHG tracks the Dow Jones U.S. Large Cap Growth Total Stock Market Index, including about 240 of the fastest growing companies in America. These aren't just blue chips, they're industry leaders and disruptors, keeping the portfolio aligned with modern growth. SCHG is reconstituted quarterly, filtering out underperformers while adding rising stars. It's tax efficient. SCHG uses in-kind redemptions to minimize capital gains distributions. Over a long horizon, keeping more of what you earn becomes a significant advantage that works tirelessly. SCHG doesn't try to be flashy. It's built for steady, scalable, intelligent growth, contrasting with flashy promises of quick gains. In a world of flashy YouTube thumbnails promising 10x gains overnight, the reliability of SCHG is refreshing. You can let it compound with confidence. The simplicity of SCHG is deceptively powerful. With a tiny expense ratio and a list of tech giants, it supports long-term wealth creation. SCHG isn't trying to reinvent the wheel. It just ensures the wheels are on the most powerful engine in the market. My answer for choosing SCHG over hype ETFs is simple: low cost, automatic growth exposure, and intelligent rebalancing. A lot of growth-focused investors like to go with QQQ, the famous NASDAQ 100 ETF. I spread my bets for a reason. SCHG gives me broader diversification, over 240 stocks, compared to around 100 in QQQ, which is top-heavy, with 10 largest positions making up over 50%. SCHG eases concentration risk and is a more measured growth vehicle. It gives me the same exposure to megacaps with a lower expense ratio. Over decades, the fee difference could fund several vacations in retirement. More stocks, less risk, and minimal cost is a winning formula. When it comes to trends like AI, chasing small caps can be risky. SCHG gives indirect ownership of the AI revolution without single-stock gamble. I participate in tech's backbone: Nvidia, Microsoft, Google, Amazon, Meta. These firms are building the future without the hype. The compounding power of SCHG transformed my understanding of growth investing. It is about years and decades of steady compounding returns. Looking at SCHG's 10-year returns, they consistently range between 12% and 15% per year, withstand volatility and black swan events. Reinvesting dividends and capital gains accelerates the journey from saving to achieving financial freedom. SCHG shines in tax efficiency. Fewer high dividends mean fewer taxable events, especially in non-retirement accounts. With most of my SCHG holdings in a Roth IRA, I can grow my gains tax-free for decades, maximizing my potential returns. Even in taxable accounts, SCHG limits churn that triggers capital gains taxes, preserving more of my returns each year. SCHG is my growth engine, paired with SCHD for dividend income and VX U.S. for international diversification. Together, they offer a globally balanced portfolio. If I was forced to pick a single fund for maximum long-term potential, I'd double down on SCHG. Every 2 weeks, a portion of my paycheck goes into SCHG. This disciplined, dollar-cost averaging approach makes me immune to emotional market swings. I let time in the market do its work. Automating investments with a fund like SCHG brings deep relief. I collect shares of world-class companies at every price point. Every red day is just another chance to buy at a discount. This mindset shift freed me from investment stress. SCHG is my growth engine, paired with SCHG for dividend income and U.S for international diversification. Together, they offer a globally balanced portfolio. If I was forced to pick a single fund for maximum long-term potential, I'd double down on SCHG. Every 2 weeks, a portion of my paycheck goes into SCHG. This disciplined, dollar-cost averaging approach makes me immune to emotional market swings. I let time in the market do its work. Automating investments with a fund like SCHG brings deep relief. I collect shares of world-class companies at every price point. Every red day is just another chance to buy at a discount. This mindset shift freed me from investment stress. No investment is a guaranteed smooth ride. There will always be corrections, bear markets, and moments of panic. But that's exactly when I lean harder into my SCHG habit. I'm investing in firms that will still be standing a decade from now. When I look at my account and see SCHG, I see a pillar of patience, consistency, and innovation. Long-term wealth isn't about being clever. It's about being consistent and embracing the power of compounding. SCHG isn't a get-rich-quick scheme. It's my path to steady and certain wealth, aiming for early retirement. Every buy into SCHG is a bet on relentless innovation, scale, and world-class businesses. I'm not just buying a stock, I'm investing in a future. By making it the core of my portfolio, I'm buying time, consistency, and peace of mind for 2025 and beyond. SCHG remains my monster growth ETF, building the future I want, one compounding day at a time. So, what are your thoughts on this? Let us know in the comments below. And don't forget to like and subscribe for more such content.